Hey, it's the Profit Answer Man, Rocky Lalvani. If you are new to the podcast, check out my interview with Mike Michalowicz. It's episode 2. If you want to hear about each chapter in the Profit First book, go back and listen to episodes 3 through 13. Episode 1 is the why and how. On the Profit Answer Man, we learn money mastery without all the complicated accounting mumbo-jumbo, using a simple system. Your accountant is too busy documenting your transactions and creating a rear-view mirror of what happened. My guess is you don't even look at the reports they sent you. If you're like most business owners, you struggle with this, and it's not your fault. We're not taught money in school, and accountants aren't taught how to be profitable. The Profit First system created by Mike Michalowicz works, and he certified me to help you implement the system in your business. Remember, the new equation is sales minus profit equals expenses. Let's face it, without cash flow, you can't pay for your employees, buy needed materials, or pay your mortgage and support your family. I help you to do that and more so you can focus on the parts of the business you love and receive the rewards for your labor and investment into your business. The stronger you are as a business owner, the more jobs you create, the better we are as a country. Small business owners are the backbone of America, and for that, you deserve to be well rewarded. Just remember, more revenue does not equal more profit. That's why we focus on the bottom line. Today's question is, should I pay more taxes? Now, let me guess. The standard answer is no. Never should you pay more taxes. But I'm going to tell you something. That's wrong. I don't know if you know my background. I'm an enrolled agent. Let me explain what that means. I'm a tax advisor who is federally authorized tax practitioner empowered by the U.S. Department of the Treasury. Enrolled agents represent taxpayers before the IRS for tax issues that include audits, collections, appeals. I have the same standing as a CPA or a tax lawyer in the eyes of the IRS. By the way, I hate doing tax prep, so please don't ask me to do it. I prefer to spend my time consulting and looking through your taxes to make sure that they are, number one, done properly, and number two, you're taking advantage of what you're entitled to deduct. Then, taxes aren't my superpower. Helping you to be profitable is. I've been reading tax code books for 30 plus years. I do it because I'm always trying to figure out how to pay less. I'm also married to a tax accountant who works for the Big Four. I know the behind the scenes of what goes on in the tax prep world, and I know the reality of how they think. I got to tell you, I do hate paying taxes, but I pay them when it's appropriate. In 2019, we sold a couple of real estate properties, and I had to pay taxes. I didn't want to, but I don't want tax decisions to drive my real estate decisions. I want my real estate decisions to drive my tax decisions, and that's an important distinction. You do it because it makes sense and it's profitable, not because you get a tax deduction. Let me explain how we got to this perverted place and why accountants want you to pay less taxes and why they don't care about profit. Here's what happens. Your tax person does your taxes, and then they tell you that you owe money. Now, they usually don't tell you your total tax bill. What they tell you is how much of extra you need to pay in or how much of a refund you're getting. So they're focused on that part, the differential. Now, here's the rub. If they can give you money back, you love them and they're thrilled. If you have to pay, you blame your accountant that you have to pay and you're mad at them. And so no accountant wants to have that conversation. So what do? Well, they just have you overpay your taxes during the year, or they tell you to do that. This way, when tax time comes and you've overpaid, they get to be the hero and tell you you're getting money back. This is absurd as going to the store, buying something, handing the cashier $20, and then throwing a party because she hands you back change. You really need to be focused on the total tax bill. I don't care what your refund is or how much you have to pay at the moment. That's where the focus should be. Now, I have noticed that most people do not review their tax returns. They don't look to confirm that there's no mistakes. They don't look to see what drove their tax bill. They don't even ask, like, what's the reason behind my total number? Where are the taxes coming from? And I know for a lot of small business owners, when I look at their tax returns, a good chunk of what they're paying in taxes is actually Social Security and Medicare, which add up to 15.3% when you have to pay both sides. And that's a flat across the board tax. So if you've got $100,000 in income this year, you're going to be paying about $15,300 just in Social Security and Medicare. Your federal taxes may even be lower depending on what your deductions are. Speaking of your personal federal tax deductions, with the current tax system, you have to have greater than $24,800 in deductions before it even matters for a married couple. And in addition to that, your state, local, and real estate taxes are capped at $10,000 total, regardless of how much you paid, which means you really need $14,800 in something like mortgage deductions, or it could be charity gifts or something else. The problem is it's really hard to have those deductions. With interest rates so low, mortgage interest is very, very low. And so it's not as great a deduction. And so if you're spending your time trying to get all these deductions, it may not even matter at the end of the day. That's why I laugh when people say, oh, I want to buy a house so I get a mortgage deduction. Most of them don't. On the corporate side, I want you to realize the corporate tax rate is 21%. That means for every additional dollar you spend, you get a 21-cent tax credit, so to speak. That's how much you save on taxes, which means you're still spending 79 cents on something that may not make sense. That's why it's better to sometimes pay the 21 cents if you're a C Corp than to go out and buy additional equipment that you may or may not need today. If it's something you need, buy it. If it's not something you need, stop spending and saying, oh, it's a tax deduction, because you're barely getting a tax deduction with today's corporate rates. The other thing I know, people talk about depreciation, and they talk about accelerated depreciation. Here's the bottom line. When you look at depreciation across time, it doesn't make a difference. So if I get accelerated depreciation and I go buy this truck today and I get to write the whole thing off this year, I'm not getting any additional benefit. What I'm doing is moving the tax benefit from multiple years into the current year. Okay, that's nice, but next year I've got more income and I have nothing to depreciate against it, even though I'm still using the equipment. And then your tax attorney is going to say, well, go buy something else. Well, again, we're back into this crazy cycle of buy to save on taxes. Everyone else is getting rich except you. And that's the point. My job is to make you rich and you wealthy. So stop spending money to save taxes. Make your decisions based on what makes sense for your business. If it makes sense to buy it, buy it. the tax deduction is later. Same thing for tax credits. You really need to sit down and do the math and say, does it make sense to do this for the tax credit, or is it costing me money? If it's costing you money, don't do it. There are certain times where the government does something crazy and it does make sense to do it, but you've got to do the math, and that's what nobody does. And so that's the important thing. I think too many business owners spend money because they think they're getting some massive deduction, and they're not. So what I'm going to say is take the time, review your tax returns, ask questions, look for mistakes. The other problem is you guys don't tell us everything on the tax prep side. So we may miss deductions because you never mentioned you did X, Y, or Z. Having those conversations and keeping track of stuff throughout the year is important. And it helps to make sure that you get all of the benefits you should get. And don't be afraid to take tax deductions. You know, if you have legitimate business expenses, you should get credit for them. And so you have to take an appropriate tax strategy. Now, there are a lot of advanced tax strategies that are out there. And yes, they do work, but the additional thing you need to consider is how much do you need to pay the advanced tax strategy person to create the reports that allow you to take those additional benefits. I know for people with large real estate buildings that, you know, there are some accelerated depreciation techniques, but the cost of doing a cost segregation study can be $100,000. That's a lot of money to move depreciation up faster that you're not really even getting a benefit for at the end of the day, because many times you're going to have to the taxes you save are tomorrow's taxes. And so over time, you're really not saving unless you've got a way to keep rolling this forward. And then when you die, you hand it over to your kids or somebody else. Again, then, your entire strategy is driven by taxes, not by life and what truly matters to you. So you've really got to take the time to think this out in a long term and have reasonable conversations with your tax people. They should be tax consultants, not just tax preparers. Most people are tax preparers. That means they take the information you give them, they throw it on the form, and they don't ask questions. But if you ask questions and you have conversations, you might be able to put it somewhere else on the form. And by putting it somewhere else, it gets treated differently. And so understanding these things is important. And if you're not having these conversations, you need to. Good tax planning can save you money over time. And that's the important thing, is what is the bottom line? The other thing is I want you to think about with accelerated depreciation, our tax rates are at the lowest they are today. If you think taxes are going up, you're going to actually want to push your depreciation into the future so that you get a larger amount of tax benefit than you do today. Again, it's hard to predict everything and we don't always know, but sometimes the things we do don't always serve us the best. Okay, that was probably a little more complicated than I wanted it to be. I hope it was clear. Hey, anytime you guys have questions, just email me. I'm happy to answer them and happy to support you. I am here to help you be more profitable so you can make this a better country. Remember, you don't need more resources. You need to be more resourceful. Remember to focus on the bottom line. If you want a done-for-you service, you can have me as your chief profitability advisor because you have your zone of genius and you want to spend time doing what you love, not reading tax code and financial statements, and I totally get it. Cool thing is I only work with a handful of clients so they get my full attention. I'm not trying to build this massive business. I just love doing this and helping out. I work with business owners who have or are growing to about $500,000 to $5 million in revenue. There's a scheduling link in the show notes. Get on my calendar. We'll just have a conversation. We'll see if we're a good fit. At best, I can at least give you an analysis of where you are at currently and how that compares to the numbers in the books. and I don't charge for that. So take advantage of free things when you get them. If you want to learn about living the life of your dreams, check out my other podcast, Richer Soul. As we close out, let's repeat the mantra. Revenue is vanity, profit is sanity, and cash is king. Let's thrive and grow. Have a profitable one.